TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 263. NASDAQ off 129. S&P's off 29. Gold contract up to $28.60, trading at $16.49 an ounce. We got silver up 24 cents, $18.56 an ounce. Light sweet crude down $1.09 at $52.80 a barrel. Notes and bonds. You got the 10-year up 14 ticks, 131.28. The 30-year up a full point, plus 7 ticks at 165.05, and King Dollar's giving it up in spades, folks. This is a classic. Bud Rolfs come up to the trend line, bust it, Bailey, and just give it up in spades. We're down 500 ticks, 99,366. The euro is at 108, the yen is at 111.57, and the pound is at 129 to 1 U.S. dollar. Tom O'Brien, what's going on?
Not much. Quite a Friday morning kicking things off, man. We got a lot of action out there.
We do. And let's go over to the dollar first, folks, because, the bottom line is that, man, when these things happen like this, it's like I've been doing this a long time, but I even always say to myself, how does this happen? Do you know what I mean?
Definitely.
Because it's like amazing, folks. Tommy and I have been talking about, as the dollar's coming up to this trend line, and this is a classic Bud Rolfs. When Bud was doing the program, man, I mean, he loved these things. He got me to love these things. And when you see this, it's just amazing. What you had here inside the dollar index, folks, is that we go back to February of 2018. Dollar starts higher. We started out at 89. The dollar goes all the way up to 99.667. You broke down the second week of October. It came right above it immediately. Then you broke down the first week of December with real conviction. And guess what, folks? This is the end of the week. It busted it, and now it busted it, and the market's so deviant. It did bust it, and it had a nice price spread this week, man. I mean, that's the bottom line. So guess what? Things changed today, gave it up in spades. And if we go over to the euro and watch the euro, what you're going to see, euro goes topside, fast and furious. We just went from 112 down to 107. It gave it up this morning at 107. Says, you know what, man, I'm not staying here. As did the yen. Now, this is the reversals out here are pretty dramatic, folks, okay? The yen also just went from the 112.19 to 111.57. And, of course, we've been talking about the divergence that the gold market continued to go higher, with the aspect that the dollar going higher, which, fundamentally that isn't how it works. And guess what? As the dollar just gave it up, gold's on a tear. And bottom line is that what you have out here, gold's up $28, and it's in an ABC structure up. 1705 is your first price projection, but pretty wild, man.
It is. Now, how about notes and bonds? As I was just getting ready for that 10 o'clock update, the headlines flashing on CNBC in terms of the 30-year with the print of 1.89% all-time lows, man, in that 30-year.
I know. This is what's pretty wild. I'm trying to wrap my head around this, because I heard this on Bloomberg also, right? And what you have is that, like 165, because the all-time high is like 175, I think. That's what I'm trying to...
For the price you're talking about in there?
Yeah.
Yeah. We'll have to square that somehow.
I know. Let's pull this up, because I just heard the same thing, and I'm trying to figure out, did one financial studio say it so another one said it? Do you know what I mean? Because 2016 are the all-time highs and lows.
So 2016, the all-time highs in the price.
Right.
Now, the U.S. one, though.
That's the generic one.
That's the only thing I'd say is how does that price in maybe?
Listen, man. It's pretty wild. So if let me put this up here 1 second. So if
you got to change to the 30-year there. You're on the 10 years, right?
Right. So we go to the 30.
There we go.
You're at 1.8. And what has happened, folks, is that
Now, data range, can you push that data range from 3 months to see how far you can go?
I'll custom it.
Perfect.
Okay, so I'll custom it.
Even go from 15.
Yeah.
11, 21, 15.
Okay.
See what it provides you.
Yeah, perfect. Okay, so now to right there. See if it does it for me. That changed everything. Oh my God.
Yeah, and I think it may have, and I think we're sitting right, if you look at the range, right, we're sitting right at 8.98, the low, the high 3.45. You got to look at the 30-year, which is number 15 there, right?
15, thank you. I couldn't find it. Okay, right. Yeah, low 1.89, and is that where we are right now?
That's right where we are.
Oh, so that's it. So that's kind of weird, huh? That the aspect we'll find out. I don't get that. But bottom line is that and the 10. It looks to me like we're going to go bust the 1.31, and if that's the case, folks, okay, we're going to flat rates, which would just be a mind blower. So 1.45 right now, right on the 10-year.
Yes.
So and of course that's another aspect of why gold is running so dramatically. I mean, if the bottom line is if we're going to go to flat rates, you're going to see something that none of us have ever seen.
Sure. Yeah.
And what we do have happening here, folks, is that because it's a Friday, and the gold market, what ends up happening, if it's had a bad week, it can get to be a disaster week in the gold market. If you had a good week, this thing can go to the moon. And depending on how long you've been around, meaning gold can jump extraordinary amounts very, very quickly. We haven't seen it in years, but the bottom line is that that's what it likes to do because it's a small market. It's a tiny market.
Yeah.
Let's go inside let's go inside the NDX, right? This looks like the same seller, Tom, as soon as we get off the air yesterday, looks like he or she came back into the marketplace pretty quick out here this morning.
I would say so, man, yeah.
Yeah. So the NQs, folks, we went from 96.23 to 9,500 in about a heartbeat. And yesterday you can see, you had the high volume low out here, just fast move down, and we'll see how this shakes out today, but you definitely got to a lower low. Inside the NDX 100, the strength versus the weakness out here. The weakness is Advanced Micro, that's down 4%. You got Align Technology down 4%. You have American Airlines down 3.7, and AMAT's down 3.3. So, there's no doubt the coronavirus, China, the market probably is picking its head up saying, okay, yeah, we are going to have slower cash flow because of the amount of goods that are coming out of China. The airlines, did you see what's happening, folks? If you're taking some of these nonstop flights in the USA, you're going to be delighted because they've, stuffed us in these planes like cows, right? But what they've done, Tom, is that they've taken those big planes that they've always flown to Asia, and they're using them on big routes in the United States right now. So,
okay, trying to get used to them at least.
Well, they got to exactly get used to them. Dow down 276, Nasdaq off 134, S&P's off 29. Stay right there, folks. Tommy and I come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's down 261. Nasdaq is off 1838. S&Ps are off 28. And our man Z in the den gave us our answer, folks, okay, because what I was doing here is looking at the futures market, okay, which is a derivative of the actual bond market. So this is pretty cool. Thanks, Z. Appreciate that, man. And now look at this, man. I have the 30-year yield up. And
perfect.
This is something else, man. Here, I'm going to put this, that's back 15 years. I got to put this back 30 years. When you see this, look at this move, man.
For those of us that aren't very visual, can you put a trend on that chart? Because I'm lost. No, I kid.
So you go back to 1990, folks. The 30-year yield was 9.15. And it's a straight move down, and this is is it an all-time low that we just broke? Yeah. We just broke.
And I'm pretty sure, man, I was born in 1980, and I got some bonds when I was born that I cashed in buying my first house, and it goes back even further. Yeah, put it on the 50, because that trend don't stop, right, man. Exactly.
You were at 14% or something, exactly.
I got some of the best bonds that you could, my family buying me some bonds, man. I got to look back at what they paid for them.
Totally.
15, remarkable.
It was 15.2%. Look at that.
It was,
September of 1981.
I had some, $1,000 bonds maturing in whatever years and stuff like that, right. And you had to pay not exactly pennies on the.
Yeah, pretty cool, right? Crazy.
It is not exactly pennies on the dollar, man, but just remarkable what you could pay for a government bond at that time, and the what you would get back in the years to come, because you were getting 15% compounded for 30 years. My goodness.
Exactly. And you can see this is crazy, right? When you look at this is like unbelievable. And so picture this, folks, too. Just mortgage rates, everything. I mean, this is a one-way trip, man. And if the 30 is going to zero, this is really going to be wild. I'm telling you, folks, this is something else, man.
It sure is.
Yeah. Who would ever think that you're on 30? This is 50 years. This is 50 years. Oh, my God. Where did 50 years go? No, it's not 50, is it? I'm not 80 years
old. It's the 46, 45. Yeah. I mean, 80's 40 years, so it doesn't quite go back 50 years, the chart, for some reason. Looks like it really starts to become fluid right at around 80.
Yeah. Wild, man. That's something else, man. It really is. So that's that. We got to go look at the XAU, HUI. There, what you're going to see. If you thought these companies were making money, folks, at 1,500, you start pressing, 1,700, 1,800. You're going to see some big numbers coming out of these companies. XAU, this is probably going to be an ABC up, another ABC up. We won't get the volume till actually late tonight on the weekly. Oh no! Oh, look at this. This is cool, folks. We don't even need the volume from today on the XAU. It already is an ABC structure up. So your B point on the XAU was 122 million. We've already done 123 million without counting today's volume, and today will be massive. So that B point is 108.35. The A point is 86. What did I say? 108? 108. Just a little ballpark at 108. So we had 14. We get 22 points, right? That gets you 123. And let's see where 123 is. Well, this is cool. 123 is going to take you over the consolidation that we've been in since 2013. Pretty intense. Because then what you do is that you just take the highs of this, folks, and take the lows of the consolidation, and then we're going, man. This is something else. I suspect the Gold Bugs Index is going to be the same setup. Let's just go see. But so Gold Bugs Index, that's okay. I need some volume up here. That B point had 89 million. Yep. And so the Gold Bugs Index also, it was 94 million, not counting today. And that B point up there is 245. The A is 198, so you get $47. That's 271. And we're at 249, and that's going to do the same thing. It's going to blow away the consolidation. Oh, no, interesting. The consolidation here is 286, so that's going to be interesting. So the Gold Bugs Index is saying we'll get up to the top of the consolidation, where the XAU is going to blow away the consolidation. We're coming up to some wild points, though, and no doubt about it.
Yeah, I mean, it was interesting when we spiked right on the open below the lows that we had yesterday in the market at 11 a.m. That was quite not at 11. It started at 11 o'clock, right? We got off the program, and things were pretty muted, and we both kind of like 12:30 said, hey, did you see what happened in the market? It all started between about 11 and 12 o'clock. Kind of like a flash spike, and we're below all those levels now in the indices.
Yeah, no doubt. And, we'll take a look at the Dow Industrials, the strength versus the weakness inside the Dow right now. And what you have, let's see, we got Boeing. The Boeing story doesn't stop, folks. It's surprising that Boeing isn't down a lot more. When I was just getting out of the car coming in the office, what they were reporting, folks, now check this out. They were reporting that in the Lions crash, they were reporting that Boeing in 2017 knew that this flashing
indicator light, right?
That's right. And they decided not to fix it.
Yeah.
It's like, really? So it's surprising that they're just not down more, because it's like, okay. But it is what it is. And they're, that setup is not that bad, actually, which is pretty wild. I mean, it's been down good, but, you got a small sign of strength out here 2 weeks ago. Let me put this on a monthly for a second. You're at the lower end. Well, it looks to me I will get tested one more time at 302. But this thing is it's setting up. It's setting up for a higher price. That's what it looks like, So I guess, the whole world knows that at some point they will get it together. I guess the real question that is in between that is that how many more stories are going to come out that they basically weren't taking care of business, or they were just circumventing certain things that they said, that's not the end of the world. You know what I mean?
Yeah, I mean, it's a bummer that, I think what you could speculate you're seeing is that a lot of horrible stuff is priced into that Boeing price. That's the only thing that I can imagine,
right.
you know, because I just Googled Boeing indicator light, right?
Yes.
So I was just thinking, all right, maybe I'll find that article,
right,
and I'll throw up what the article that popped up, all right? And it's a May 2019 article, and it speaks to, and this is how much bad press keeps coming out that I even forgot this article. And this one's a New York Times article in May last year. It says Boeing believed that the 737 MAX warning light was standard, and it wasn't. So they began delivering that MAX plane to customers in 2017. The company believed that the cockpit warning light was a standard feature on all new jets, but months after the planes were flying, engineers realized the warning light worked only on planes whose customers had bought a different optional indicator. In essence, that meant a safety feature that Boeing thought was standard was actually a premium add-on.
Wow.
I mean, my goodness, right?
Yeah.
It's like,
who made that decision that it's going to be a premium
how does
add-on?
that happen?
Yeah.
So I think it's just all priced into that equity right now.
Totally.
We'll see. Yeah.
Stay right there, folks. Tommy and I come right back. Dow down 221, NASDAQ off 114, S&P's off 24. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow down 247, NASDAQ off 116, S&P's off 26. Let's go to Mark in Bedford. Hey, Mark, what's going on?
Not much, Tom and Tommy. Happy Friday.
Happy Friday,
Happy Friday, Mark.
So we need a weather report from Boston first.
I have, your mother said never say dirty four-letter words. Well, I'm going to say one. Cold.
Okay. Okay. It's February.
So,
it figures.
although it's supposed to be 50 by Sunday, so we'll see.
Good. I know.
Well, that's pretty good because it's 50 degrees actually in Tampa today. So we're on the flip side of that.
Yeah, we get a cold spell.
We do.
Yeah.
Yeah, it probably came all the way south, but you got enough heat in the atmosphere to warm it up a little bit.
Oh, we love 50 or 60 down here. Listen, we'll take it, man. We'll take it all day
We're
long.
not going to get, this might be the last day, speaking seriously, of 50
Right.
until 10 months from now. Seriously.
Yeah, if it's going to be 50 up here, I wonder what it's going to be like down there someday.
That will go right back to 80.
We just had record-tying temps. I mean, it's almost every other day, 2 days ago or something.
Yeah.
So 85 degrees in February for us. It's coming quick that summer.
So here's my question. Here's my question on gold. Tom, you say that you were in a confirmed ABC up to 1705.
Yes.
What will happen when we get to 1705? And what do you think? We'll just roll past it and keep going?
Well, what normally happens, so an ABC patent, folks, you get a 1-to-1. Like, say, if the A to B is 10 points, the C to D, the C to D is 10 points. That's a 1-to-1. What gold likes to do is a 1 to 1.382 to a 1.50, whether it's going up or down. It's highly volatile. So that would mean that the first A to B is 10, the second one's 15. So I expect more than likely we'll blow by it. But yeah, that's how I'm looking at it. But 1705 is the initial price projection. What's sticking out here, which looks like to me that more than likely we might get to, and that's when I had done that workshop, I don't know, 6-7 months ago, for the gold report, is that you have, I think it's 1795 is sticking out.
1794.
1794 is sticking out like a sore thumb. And there it is there. It's the swing high from October of 2012. More than likely that's where it'll go, because most times you don't stop right in the middle of it. Do you know what I mean? So.
Yeah. So here's another question. I have a very small position, 300 shares of Nugget. My purchase price was $27.46. And right now it's trading at $37.76. I'm just going to put that away and hang on to it.
Well, no, that wouldn't be, because what happens here, so let's go over Nugget. So Nugget, is the direction daily 3 times bull position of the New York ARCA Gold Miners Index, right? Now, this is a daily trading vehicle. So when you say put it away, do you mean like for months?
No. Just until we get to the 1705.
Okay, good. Yes. Okay, good.
I think we could get to the 1705 Tuesday, Wednesday.
Yeah, no, that's great. Okay, I just wanted to get that clarified, because what happens, folks, is that if you catch a trend right with these 300% leverage positions, yes, it goes very quickly, and I'd agree with that, because it looks to me like Nugget's going to make that run up here to that $45, man. So. You're taking away 36.84 today. It has the volume. We've already done, we've done 49 million versus 49. So the rest, whatever volume it does today is taking out that swing. So, it's game up. It's at 45. And what you do have, so picture the ABC structures also, folks. You have the A to B is normally a straight line move. The B to C drives everyone crazy because all over the place. The C to D is a straight line move. So, more than likely, 1705 is only $52 away, so it's not the end of the world. And what will happen inside the gold market is that there's plenty of people that figure the gold's never going to go. So there's plenty of people short, and they got to figure out what they're going to do here. Do you know what I'm saying? So.
I want to go back to Boeing for a second. Tommy pointed out, I think it was the last time I called, that we only got 2 aircraft makers.
That's right.
So I'm sure that there's people who are buying Boeing and just putting that away and saying, well, they got to do something with those Maxes at some point in time. But, some people are now talking about that the FAA may never let those things fly. They get so many issues with them. So, I would not hold Boeing here. I would be very scared about holding that stock.
The only thing I'd say there, Mark, and it's a great point, you should factor that into the decision, man. It's something you should have, I would call it as a real outlier event that would happen, though. I mean, Boeing, I think they produced 400 planes before they stopped production.
That's correct.
And we only have one plane maker for the United States of America, and there's no way that that's going to go away anytime soon. And so I would struggle to see how that company is not even technically even bailed out at some point if it becomes that bad. That's just the part of things, you know. I mean, there's no way the U.S. is going to rely on Airbus to make all the planes in the world.
True.
That's not
Tommy, that's true. But the FAA can come along and say we have so many issues with this 780. With this MAX airliner, we're just not going to let it fly. Now, if people want to go fly in the Dreamliner, which is a 787, I think, or if they want to fly in a 747 or something else, then that's fine. And those people, you know, the airlines can still use those. But we're not going to let this 737 MAX up at all. And that has been discussed. I know that I've seen that on both CNBC and Bloomberg. So, I would be very leery about that. I don't think the FAA will say that personally, but I think that has to be on the table.
Yeah, I mean, everything's on the table. So I'm not going to, you know what I mean? It certainly is. And you know, morally, in terms of just the behavior of those executives, I mean, it's criminal behavior. That's my opinion for sure. But I imagine that they're probably going to get it worked out, I imagine, because 400 planes at the price that they're paying per plane, it would be hard-pressed to see all of those planes just going to the junkyard.
Yeah, and the FAA...
I think the number is 416, I think.
Yeah.
I think the number is 416.
I imagine they're going to rename that plane. They'll be back in the sky within the next year. That's just my speculation. But you know, it's you want to keep your eye on it, because I just think it would take something like that story, Mark, to really bring it down, and I just don't see that story happening. I mean, you're seeing stories coming out about finding debris in the tanks, right? You're seeing stories coming out about, you know, basically the revelations of what they knew ahead of time, not really stories coming out saying that they can't fix this plane, just that they're being so scrutinized that, you know, we're talking with Dave White, it might be the safest plane in the air. Hopefully it is once they get it in the air, because every detail looks to be scrutinized, and I think that's what you're seeing as well coming out here.
And the other thing is, you can bet going forward, any plane that Boeing designs afterwards will also be highly scrutinized. It won't.
Boy, I hope so, man. I hope we all learn something. I hope that FAA does take a harder line, man, because they're complicit in this too. There's no way that's not part of it.
Cooking, brother.
Hey guys, you both have a good weekend and stay safe and enjoy your weather down there.
You too, Mark. Thanks for the call, man.
Stay right there, folks.
Thank you. Bye.
Have a great one, man. Stay right there. Tommy and I are coming right back, folks. Dow's off 261, Nasdaq's off 131, S&Ps are off 30. We'll come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Tom and Tommy O'Brien. We do appreciate you growling and prowling with us out here. We have the Dow off the 310, NASDAQ off 150, S&P's off 34. And let's go over and take a look. So we're going to pull up this 10-year yield chart also. And when you see this, folks, this is pretty amazing. So we're at 1.44 right now. I'll bring this back, and you can see this break here. Well, actually, this is the one I was waiting for. So what this is, oh my God, this is sick. So you get a potential. Now, what happens here is that, that's right. On the 10-year, we're going to have I'll have the volume in the futures market. So I can put that together. So it looks to me like an ABC down. Now, if we have an ABC down, this is how this is going to shake out. So let me do this here. 1, 1, and 2. Let me see. So you got the B point on this, okay, is 1.5017. The A point is 1.8984.
So call it 1.9 and 1.5. We're pennies away.
Good. Okay, good. 1.9, 1.5. Okay, so that's 0.4, right?
Yes, 0.4%.
Okay, so 0.4 gets us, and 1.6 is going to get us to 1.28, which is going to break it. So
yes,
watch this, folks. Okay.
All-time low 1.31, 1.32, something like that.
Yes, exactly. And you're going to see that was in July of 2016, 1.318. Now, if we break that, folks, the bottom line is that if you do the price projection on a consolidation, I'll bring this back further. I just brought that back 10 years. I'm going to bring it back 25 years just so you can see how this shakes out. You break this consolidation, you can make the case, you take the 1.37, and I'll just take the top of that, of 3, you're going to 0. It's like, oh, my God. Right?
Sure.
This is pretty intense, man. I mean, yeah. It really is. And then one of the Tigers had a question in the den. And what the question is that we've been talking about, okay, Tom, the question, if the yen has bottomed, the euro has bottomed, what is keeping gold from flying higher since gold has been at highs without the help of either one of the currencies? My take would be that and this is where divergence comes in, is that, none of us know really how that works, but gold basically has been up there because gold is figuring that, the dollar and the yen, that we're coming into lows. That's sure, because it's all speculation anyway. But this is, in both cases, folks, okay, these are major failures, you know, and when you get a major failure, you can get a very quick move to the other side. You know, if we look at the euro, you're going to see the euro, you know, this has been a mess. I mean, you go back to the euro December 31st and was at 112. We made the low yesterday at 107. And the, you know, bottom line is that you get some big action out here today. We just went from 107 to 108.62. And I guess the biggest part of this, when you're actually looking at it, not as to how far we went, but that you have a rejection of the swing point of 108.85. That's kind of how this shakes out. 108.85. And we've hit, well, it's actually, it hasn't got it yet. It's 108.62. The market looks like it's saying it will do it. And then if we go over to the yen and do the same exercise, what you're going to see is that the yen's given it by 53 ticks, which is nothing, by the way. Now, the yen would still have to come back down quite a bit. The yen would have to get under 110.29. So, but market-wise, it's saying, hey, guess what, man? We're going. So it's a fun market out here today, folks. This
as we speak, they're accelerating lower. I mean, even since 9:15, we're down 30 points in the S&P right now.
Yep. Yes. Let's take a look. Man, this is going to be, and oh, you know what, too? Now, this is going to be wild. This is option expiration day, too.
There you go.
Yeah, so you're going to have some, you know, you're going to have, the volatility is going to continue a lot higher. Yeah, this is making another leg down.
I mean, it's crazy. We were just at 33.97 late Wednesday night. We had the collapse Thursday, collapse into Friday, so we're now a solid almost 70 S&P points off of where we were trading at within 2 days ago.
Right. And if you keep your eye on the NASDAQ, folks, what happens is this is where, the NASDAQ, because all the growth stocks are in the NASDAQ, it's just beautiful when it's going up, but the NASDAQ, when you get a retracement, is just vicious.
Sure.
It's like, oh, my God, Yeah. And inside, let me just look at Amazon for a second and see where the big dogs are.
Yeah, Amazon not as bad
Not
back
bad.
today, but check out Microsoft is a big one I saw with action to the negative side yesterday and today. Apple with some action as well.
Yep. Microsoft is down 455.
Yep.
Excuse me, folks. Apple down 442. Yeah. Yeah, well, there's action out here, and I suspect what we are gonna get is that we had intraday before the market really came back. You had volume on the way down. The SPY had done 74 million shares after making the high out here with 48. We're already at 33, so that's going to be monster volume. If we put this on a weekly, let's see what we got. 334. Oh, this is interesting. 332.95. Well, it's going to be close. So it would, if you got back inside 332.95, which we're not that far away from it right now, that on a weekly, that'd be a big deal because that's where we broke out from. That's the high that was generated out here the the fourth week of January. So going to be pretty wild watching this thing shake out, no doubt.
Hey, how about some of the companies with earnings out? Sprouts Farmers Market, SFM.
I heard you talking about this morning. So they
delivered in a big way, man.
Look at that. Up $2.31, 18.35. The revenue out here, wow, that's pretty cool. 1.4 billion in 90 days.
I mean, their product segment they listed there, quote unquote, healthy grocery stores. That's a good tagline to be in, man. In terms of trends for consumers, healthy grocery stores, and it looks like delivering with their numbers, man.
Yeah, no doubt. And so you got net sales, 1.4 billion. That's a 8% increase from the same period in 2018. That's a good number, man.
It is.
Comp sales are growing at 1.5.
I mean, look at fiscal year net sales, $5.6 billion, 8% increase. You saw when Amazon decided to enter the grocery market, right? Where did they go? They went to the biggest of them all in terms of healthy grocery stores, Whole Foods. Now, Amazon caters to that type of a consumer where slightly affluent, right, can afford that type of product for their prime, but still, Sprout Farmers Market House, like, boy, oh boy, they seem to be positioned well.
They're probably on Amazon's radar.
They better be.
Stay right there, folks. Tommy and I'll come right back.
You are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now down 267. NASDAQ off 130. S&P's down 28. Volatility continues out here, no doubt, man. You know,
it's early in Friday, man. We'll see what happens. We get the markets in pretty dramatic fashion right now, right near the lows of the day, for sure.
And, you know, if we go over to that oil market quickly, we take a look at ExxonMobil. You're going to see this is making another new low. The oil contract itself, let's look at this active contract. So you're at 53 right now. That doesn't look that bad. Yeah, okay. The equities, though, the oil, big integrated oil equities, folks. Let's go Chevron for a second, CVX. Because you got to pay attention to them, because they've been leading that contract lower. That's down $1.50. Okay. Yeah.
And, I encourage people, man, I talked about in the 8:30 show, you head on over to the front page of TFNN. You'll see newsletters, gold report. We still have up here a lot of information about this webinar on the order page itself. You can see kind of where I'm looking, Tom. I got the charts, which is kind of cool in terms of what you talked about in the September webinar that you did with gold. The next stop is 1794. Pretty timely with gold actually above 1650 when we started the show this morning. So you got that chart in terms of gold trading more than many other financial assets. Gold delivered positive returns in the long run, outperforming key asset classes. Gold outperforming all major fiat currencies. That subscriber webinar, right accessible. If you sign up, I kind of have the subscriber area. This is where you'll be able to access. If you do subscribe, next leg up in gold, 1794. Find out why. And what's still up there as well from October of 2018. The gold market from the beginning of the bull market in 2001 until now. What was it, 282?
282.50, yep.
282.
I'll never forget that. Totally. Okay, folks, you stay right there. We got Think of Some coming up next. And man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Go get him, folks.